Good morning, good afternoon, everyone. We've just hit 2 p.m, so we are going to start with today's investor briefing while a few more people jump online. My name is Alfred. I'm part of the investor relations team at Novatti and will assist with running today's investor call. We're joined today by Novatti CEO Mark Healy, who's been leading a transformational change at Novatti over the past 4 months and brings more than 20 years of experience in the global payments industry to Novatti, where he's held senior roles with some of the biggest payments companies in the world. For some of you, this might be the first time you will have a chance to meet Mark, so we do welcome you to submit any questions you have for him, and we'll address them after the brief presentation. To submit your questions, please type them into the Q&A box at the bottom of your screen. It's the one with the question mark in the little speech bubble. Now, it is a very busy day on the ASX with plenty happening around September quarterly, so I won't take up any more of Mark's time. Mark, let me hand over to you.
Great, thank you, Alfred, and good afternoon to everybody. So straight into a quick reminder or snapshot for those that aren't familiar with Novatti. So Novatti is an Australian-based B2B payments technology company with various points of presence overseas in support of our customer base. In late Q4, there was a leadership transition reflected by the senior leadership team you can see on the slide there. I took the CEO role in late June of this year, and around about that same time, Dash Mendes joined as the CFO, and Peter Cork has transitioned to an executive director role focused primarily on strategic business development. That CEO transition is now largely complete and has been handled seamlessly and efficiently inside the business, and so we are now firmly settled into this new senior leadership team. We exited FY23 with a 20% growth rate at the revenue line, and I'm very pleased to say that through the first quarter of this financial year, we have continued that return to growth with a $10.8 million revenue result for the quarter. And we'll talk more about some of those results in the coming slides. That number represents a 6% quarter-on-quarter revenue increase for the group. So our mission statement, this is a slide that has a huge amount of relevance to us internally, and also as we think about operating the business and the growth trajectory for the business. Why do we exist? We're here to enable businesses to pay and be paid. So there are many payments businesses, both in Australia, New Zealand, and around the world. So what makes Novatti any different? What's our point of difference? Well, the answer to that question lies exactly in that statement and the two-sided nature of the pay and be paid algorithm. So Novatti's strength is that we are built for digital. We are built for all sides of the digital payments landscape. And given the breadth of our capability, we have the product and technology and the capabilities to support the end-to-end payment needs of any business, from payment acceptance to processing to settlement, treasury, payables, and remittance. We are a unique non-bank payments business in Australia, and our strength and our value proposition is assisting our clients to help operate their businesses more efficiently and build payments as a competitive advantage into their own businesses as they undertake digital transformation. Along the journey, we have built a very significant ecosystem around technology, licenses, and partnerships. This is, in my experience, a very significant advantage and a unique capability for a company of this size. We have relationships with many of the largest and systemically the most important industry providers, both locally and internationally, and gives us a real capacity to start to leverage this ecosystem and monetize this ecosystem as we organize the business in a more coherent way, and we focus around the simplification strategy for the business moving forward. So very early on into my tenure as CEO, we looked at the portfolio and reorganized the portfolio around 4 core pillars. Historically, Novatti's been a very complex business, overly complex in my view, and so the starting point was to think about the portfolio across these 4 pillars. You can see those represented in the bottom graph here. They are payments, Australia, New Zealand, international payments, technology solutions, and investments. And you can see the revenue mix there historically through that bottom graph. Under the new strategy, entitled Fusion, but is essentially a simplification strategy. Our focus and our future growth is firmly centered around the core pillar being payments Australia, New Zealand. Our aim is to scale and that business building repeatable, recurring revenue streams across 4 integrated product lines, being acquiring, issuing, cross-border, and bill payments. I'm very pleased to say that in Q1, this pillar, the payments AUNZ pillar, delivered $3.5 million of revenue, which was up 13% quarter on quarter and 54% in the prior comparable period, being Q1 of FY23. In the bottom graph, to repeat again, you can see the total group revenue for Q1 was 10.8 million, and you can see the business mix and the revenue mix starting to see that greater relative contribution of the payments AUNZ business, and that's payments AUNZ centric strategy, which we expect to continue through FY24. So a little more around simplification, which we're starting to see delivering very early results. So you can see here again, revenue, we have continued that growth trajectory for the business, up 6% quarter on quarter to 10.8 million at a group level. And we can also see the early focus on expense starting to bear fruit as well. There was an enhanced focus on cost discipline in the business as we work through our runway to achieve our target of operating cash flow profitability by the end of this financial year. We've reduced expenses, excluding the IB, the International Bank of Australia. We've reduced expenses by $1.2 million on the prior quarter. And you can see that as a significant reduction in terms of the percentage of revenue, down to 74% versus 9% on the prior quarter. Operating margin is trending positively, which we expect to continue through the course of this financial year. Another important element to the simplification strategy, not on the slide, but is an important part of how we're organising and operating the business through Q1, is there's been a management restructure inside the business that is designed to simplify our internal structures, to simplify how we go to market, and to simplify the process for customers to do business with us. As part of that, the Group Chief Operating Officer has retired. The general manager structure under the previous business units, which have now been dissolved, has been removed from the business. And we have effectively moved away from monolithic product-led business units to a functional structure that is much more integrated and connected, enabling us to now focus on the integrated go-to-market model, where we are organising ourselves internally in a much more efficient and effective way to target and position and message to the market around our core value proposition. We're now in a position to move into stage 2 of our business simplification, which is a strategic review of all areas of the business against our strategic and financial goals. We will do that over the coming 1 to 2 quarters, and we expect that to identify potential opportunities to further streamline the portfolio of businesses within our 4 key pillars. Margin is now the number 1 focus in the business, and we're seeing early tangible results here as we work through that simplification strategy. The group margin for Q1 of this financial year was 48%, but importantly and very strategically, in that core payments Australia, New Zealand portfolio pillar, we have been able to lift margin to 45% from 40% in the prior quarter. I mentioned the internal restructure just previously. That internal restructure is not just in and around an internal lens in terms of how we think and operate, but is setting ourselves up to actually engage the market in a different way, to be much more effective and efficient, and set up our commercial teams to enable us to cross-sell and for customers to have a much better experience as they engage with us, both in the sales funnel and through the operating funnel. From a margin perspective, we have a very clear 3-year or mid-year margin target of 70+% for all parts of the business, which we used as a key marker as we think through the strategic review of all of our business areas over the coming quarters. The path forward is very simple. So this is a slide that I've spoken to several times now on the last 1 to 2 webinars. So I've talked in this session today about the simplification element and how important that is. So we have structured the portfolio in a much more coherent way that is now complete. We're about to enter into a strategic review of all parts of our business against those strategic and financial goals. We have, from a structural point of view, a process point of view, and a cultural point of view, moved away from monolithic business units that were hard to engage with and hard to enable cross-selling into a functional structure to enable us to organise our go-to-market in a much more integrated way with an integrated offering, and to enable the commercial teams to cross-sell much more easily. And the outcome of that, with a continued focus on strong revenue growth at higher levels of profitability, driving through increased gross margins, which we've already started to see inside the business, with a view to achieving our goal of operating cash flow positive status by the end of the financial year. And Alfred, that's the end of the slides and prepared remarks. So I might at this point hand over to questions.
Thank you, Mark, for that presentation. We've had quite a lot of questions come through already. If anyone does have any they'd like addressed by Mark, please type them to your Q&A box, and we'll start working through them. Mark, the first question comes from Glenn. We've now seen a very clear idea of how Novatti is going to achieve its cash flow break-even target by the end of the financial year, a combination of improving margins and improvements in the cost-to-income ratio. The product of these two potentially producing a non-linear improvement in its performance. Is this the right way to think about the path to becoming operating cash flow positive?
Look, I think it is. It's a very dynamic business. We're operating in a very dynamic market. We've got a lot of potential capabilities inside the business that, as I said before, haven't been organised in a very coherent way in the past. And so there is an ability here to think through from a strategic point of view and push and pull together some elements of the business that haven't been pulled together in ways historically. And so I think as we work through that, it will certainly be a non-linear path. However, having said that, we've got some very clear markers in terms of where we want to be from a growth perspective, a margin perspective, and a bottom line perspective. So there is an enhanced discipline inside the business. That's a very different mindset inside Novatti than there was 3 months ago, 12 months ago, 2 years ago. And so that pathway to achieving those targets is being led and managed in a very different way to the past.
Thanks, Mark. A question from Scott. How are customers responding to this new strategy?
Yeah, that's a great question. Customers should always be front of mind. And so what I will say is that, if I go back 4 or 5 months, some of the frustrating and difficult feedback from customers was that Novatti was a little bit like a bank. And so when customers or potential customers engage with us, they would make comments like, engaging with part A of your business is quite frustrating because it's not quite sure what part B of your business is doing. And so that had to change, and had to change very quickly. And so that was really part of the driving, one of the key drivers to moving away from this business unit siloed structure into the functional structure in and around payments. And so the early feedback so that restructure was implemented in September, so not that long ago. But already in the last few weeks, I've had really excellent feedback, both internally from our commercial teams, but more importantly to the question from customers. There's just been a far greater, there's been a greater agility and a greater connectivity and a greater level of collaboration that customers are seeing and hearing from us in terms of how they engage with us. So it's very, very pleasing and very promising for such a short period of time.
Mark, another one from Glenn in regards to the 1.2 million reduction in costs. Were reduced labour costs the main driver? What other significant drivers of this cost reduction were there?
So the key sort of costs in our business are, as mentioned, around people, marketing, and technology. They're really kind of the three drivers of costs. So it's not one particular aspect. On the people side, we've actually added 6 people to the headcount through the quarter. We started at 163 direct staff plus and direct contractors. We've ended the quarter at 169. Those additional headcount are exclusively within the commercial teams and the front-end business development teams to help us continue that strong revenue growth. So we're not walking away from continuing to invest in people and capability, but there has been and just an overarching focus on greater discipline around all elements of OPEX as we kind of work through and manage the business.
Thanks, Mark. We've got quite a few questions around the bank, so I might just work through those ones consequentially. Chiang and Roger are asking for an update on IBOA and the progress it's been making towards a full banking license.
So I'll start with just the helicopter view. So for those that aren't familiar with the bank, the International Bank of Australia achieved its restricted license in late last calendar year after several years of effort. The bank is set up inside the group with a high degree of independence. It has its own independent and separate board. It has an independent and separate CEO and its own management team. It's working its way through its business plan and the deployment of funding, technology, compliance, and operations, including how it goes to market. The Novatti Group is a 91% shareholder of the International Bank of Australia at this point in time. There's a regulatory requirement for that to reduce over time, and the bank board is working through a variety of mechanisms to address that. What I will say is that it's in a very difficult environment at the moment, as everybody would appreciate, in around funding and investment. And despite that, Novatti won't be contributing additional investment into the bank moving forward. And most importantly, on the Novatti side of the business, we're not distracted by the bank, and we are very focused around running and managing business to our target of achieving operating cash flow positive.
Still on the bank, Mark, from Nathan. Can you comment on the news report a month ago about a sell down of IBOA, the bank, and where the license just can you comment on that media release, that news report?
Yes, I think I'm broadly familiar with that release. What I will say, just repeat what I said. So, we're the majority shareholder now with 91% stake. There's a regulatory requirement for that to reduce over time, and the bank board is actively looking at a variety of mechanisms to achieve that. And that's really a subject for the bank board. And once they've reviewed a variety of options, then we will communicate that result to the market.
Question from Nathan and Steve. Is a cap raise required to acquire a full license?
So the IBOA's capital requirements will mostly be dictated by the regulator and what's required there to achieve a full banking license. We're working through that period, as I said again, in terms of the pace at which it enters the market, its operating footprint. And so we'll wait for further progress and guidance from the IBOA board before making any sort of commitments around that point.
Thanks, Mark. This will just one last question on the bank, and then we'll move on to the rest of Novatti's payments business from Harold. Can you detail the purpose of the bank within Novatti and its function down the track?
So there's two elements to the bank's strategy. They are B2B and B2C focused. On the B2C side, they have a specific target customer segment around migrants and international students. And the B2B focus is in and around providing greater support to fintechs and becoming essentially a payments bank. And so both of those elements tie in neatly and would support how the payments organization within the rest of the Novatti Group goes to market. We have a very strong and active cross-border business, a very strong and active bill payments business, which is largely driven by international students at this point, making payments in foreign currency for local bills. And we as a business would also be strengthened by having greater flexibility with a payment-centric and payments-focused bank inside or being related to our business. And so for both elements, there is a strong synergy between what the Novatti payments business is trying to do and the strategy of the bank.
Thank you. A question from Anthony. Can you give us a view of how the AUDD stablecoin is progressing and how much has been minted?
So just pulling back a little on the stablecoin. So we're a strong believer in the thesis that stablecoins will play a really important part in the payments ecosystem going forward. If people want to pay in digital assets, then we want to enable our customers and merchants to be able to accept those payments through that mechanism. It's a very fast-paced environment. Things are growing and changing rapidly, almost on a daily basis in that space, as most on the call will know. There is a real validation of our thinking around stablecoins that is playing out in the global payments ecosystem through some very large players. So the likes of Citigroup, JP Morgan, PayPal, etc., all deploying their own stablecoins to assist with either internal and/or external efficiencies in their businesses. So really a strong supporter of stablecoins. Inside the Novatti business, it's somewhat structured a little like the bank, has its own leadership and management team, and they are very focused on deploying, again, operations, compliance, and technology to be able to make the stablecoin available both potentially to Novatti and also to other providers in the payments ecosystem. We have deployed now to 3 blockchain environments. The minting and the activity around there is ongoing, but coming off a very slow base. But the stablecoin is live and operational. And again, similar case to the bank, as we think through those use cases and think through how that business is going to grow, that that management team is looking at a range of funding options to continue with the growth of that part of the business.
Mark, question from John. Do you anticipate any write-downs in FY24?
As we get into the strategic, clearly from the business historically has undertaken a number of acquisitions. There will be a range of balance sheet entries related to those acquisitions, depending on the outcomes of that strategic review process, either acquisition and/or divestment, whatever that strategy is likely to be there. That potentially may raise itself, but without preempting the process and without getting ahead of ourselves, then I won't make any kind of further comments in and around that, which will be a case-by-case specific set of circumstances driven by the activities that come out of that strategic review.
One from Roger. Is there any more detail on the integration progress with payments within Reckon?
So the Reckon relationship is a very strong one in terms of the operating paradigm with that business. We are integrated for card not present payments within their Cloud One product, being Reckon One. That is effectively still in its very early stages of the multiple thousands of customers that are using that product. There is a very tight relationship as we deploy additional payment services, be they card present payments, either through terminals and/or the tap to pay mobile payment solution, direct debit payments and other forms of payment. And so, for example, last month there was a very strong partner, the annual Reckon Reconnect Partnership Conference. We had a very strong presence at. We are the Reckon primary and exclusive acquiring partner, and so that continues to deploy at an accelerating pace, but it's still just coming off a very low base at this point in time.
Thanks, Mark. We are starting to run out of time, so we'll probably only go through 3 more questions. If anyone does have any, please pop them in now. Otherwise, we'll get to them via email. Another one from Glenn. What were the group margins for the quarter?
So Q1 group margin was 48%.
Thank you. One from Leo. How can we be confident that this new strategy will work?
Well, there's no certainty in strategy. However, having been in the payments world and the software world for close on 20 years now, what I can say is just repeat some observations I made earlier on in the presentation. What Novatti has built in terms of its ecosystem around technology, licensing, partnerships, and product and capability is really quite phenomenal. As I said before, I believe this is a unique business. It has a unique capability outside the banking sector, and the ability to execute around our strategy very much now rests in our hands in terms of the new leadership team, the new management team, and this integrated go-to-market to be able to position, target and message correctly and execute with pace and execute with agility and execute with discipline in ways that we perhaps haven't in the past.
Last question, Mark. It's from Justin. Can you explain why merchants are choosing Novatti over other payments companies?
So the core of that is really twofold. So as I said earlier in the presentation, the breadth of our capability enables Novatti to solve the end-to-end payments needs and problems of any business. We allow them to operate their business more efficiently across multiple channels, and effectively what we're doing when we do that is we are building payments as a competitive advantage inside their business. As I said before, I believe that we are a unique business in terms of our ability to do that inside the market today. And that's why customers seek to choose us, and that's fed back to us from customers that have engaged other providers in the marketplace before coming to Novatti. So we get good validation from that on a regular basis from customers. Our job now is to execute around that as we engage the market directly in a more effective way.
Excellent. We are now out of time. So, Mark, thank you very much for making yourself available to shareholders. A recording of this webcast will be made available in the coming days. So on behalf of everyone in attendance, I'd like to thank you for your time today, and we look forward to hearing from you again soon.